Sylvain Vervoort with Technical Analysis Part 34. With this part I am introducing a live swing trading example using the stock GCI over a future period of time. Idea is that you follow the trade evolution and that we systematically learn applying all technical analysis techniques, hopefully with success. Pay a visit to my website at stoccata.org and buy my book Capturing Profit with Technical Analysis. GCI, or Gannett Company Incorporated, is an international media and marketing solutions company. We will swing trade the stock in a series of videos applying all technical analysis techniques explained in the previous videos. We will use a daily, weekly and eventually an hourly chart. On these charts we will use a number of indications. The first thing is of course the price chart, and generally we will use a candlestick chart. Here we will mainly look for candlestick reversal patterns. Basically we will use Bollinger Bands to look at price volatility. With trending prices, the bands will be wider as a result of the higher volatility in price, moving farther away from the mean, whereas during consolidation periods, bands will be narrower as a result of smaller price moves closer to the mean. On the price chart, we also use three simple moving averages: the blue 50, the 100 red dashed, and the red 200 bars simple moving average. We will use these averages looking for support and resistance. In the uptrend here, bouncing up on the 100 bars average and finding resistance against the 50 bars average. On the level of price, we will of course use support lines, resistance lines and trend lines, and eventually trend channels. We will maintain an Elliott wave count. To facilitate the count, I will be using my Elliott wave count indicator. This indicator is available at stoccata.org/metastock/formulas.html. Point of view risk management, we will use an initial stop and we will keep an eye on two trailing stops: my modified ATR trailing stop and my trends trailing stop. Depending on the ATR multiplication factor, we can use the ATR trailing stop as a medium-term trailing stop, while trends will be used mainly as a trailing stop for short-term swing trades. The formulas for these trailing stops are available at stoccata.org/metastock/formulas.html. To find support and resistance levels in a price correction phase, we will make use of Fibonacci retracement levels. We will of course also use Fibonacci price projections to find future price targets. We will not only use the standard price projection but also the historical Fibonacci projection that I introduced in this previous series. The use of the Andrews pitchfork will help us to estimate the future price inclination and the median line price target. Together with Fibonacci targets and trend lines, the Andrews pitchfork will also help us to estimate when a future price target may be reached. We will use a weekly chart to have a better long-term view and to have a better look at the long-term Elliott wave count, as well as finding main support and resistance levels. Occasionally we may use an hourly chart. This can help us to find earlier buying or selling points, mostly applying a short-term Elliott wave count. On each of the price charts, daily, weekly and hourly, we are using all the same technical tools as shown in the daily chart. The second part of the price chart is a chart with 4 sub-windows holding 8 indicators. These indicators will show overbought or oversold levels, divergences, and showing that there is a better chance for an up move or a down move. The first upper window holds the price bars as a reference for this chart and a 50-period stochastic with a 3-period slowing oscillator. High and low levels in this oscillator will rather follow the medium-term price moves. The 14 periods ARSI indicator in the same sub-window is used as a fast short-term indicator that will show many useful divergences. It can be found at stockata.org/metastock/formulas.html. The third sub-window has volume bars that will show if price move is yes or no supported by volume. It also holds my SWAPO indicator. This is a smooth, fast indicator that takes into account the volume. You can find this indicator at stockata.org/metastock/formulas.html. In the fourth sub-window, we have a Bollinger Bands %B indicator based on the average Heikin Ashi closing price. This is a fast, leading, volatility-based indicator, most of the time showing very early divergences. This indicator will become available first in an article to be published in Stocks and Commodities magazine. The inverse Fisher transform RSI indicator switches very fast from one side to the other, creating clear buy and sell points. Again, this indicator will become available first in an article to be published in Stocks and Commodities magazine. We skipped the second sub-window. In this window we have 2 more indicators. The SVE RSI swing, giving fast swings based on the RSI indicator, and the SVE trend break indicator that signals short-term trend breaks. For the time being, these 2 indicators are not publicly available. This is the end of the introduction of a live swing trading example using the stock GCI over a future period of time. Idea is that you follow the trade evolution and that we systematically learn applying all technical analysis techniques, hopefully with success. Tell your friends about these videos, and while visiting my website, order my book Capturing Profit with Technical Analysis. See you in the next video for the start of Swing Trading GCI.